G'day folks, welcome back to another update on Pete's Investing. Today we're looking at a currency, the US or the Euro US currency. Now the charts are showing a bullish momentum, so going long only, but watch for any of that retrace still in play potentially. So trade with purpose and daily trading discipline and core lessons. So what do I mean by that? If you're a regular viewer, you'll know that I cover various instruments almost on a daily basis, and periodically I cover a +1 video. So the daily videos include such instruments as natural gas, gold and silver, Bitcoin and Ripple, S&P 500 and Nasdaq, German DAX and Japanese Nikkei, high-grade copper, US crude, and currencies. Plus, I often do requests from you guys and gals, so feel free to provide suggestions for any reviews. And periodically I make a +1 video which aims to be a tutorial. So even if you don't intend to trade any of the videos I cover, try to watch them to follow and understand the concepts and how to apply them yourself. Think about learning a foreign language. You may attend a weekly or fortnightly class. This equates to the +1 videos. So watching the daily videos equates to practicing what you've learned to real examples. My goal is to teach you how to trade on your own, i.e. give someone a fish, you feed them for a day, you teach someone to fish, you feed them for life. Okay, let's get started. So today we're looking at the Euro US. As of today, July 4th, the Euro strengthens. The Euro has appreciated approximately 14% year to date, bolstered by investor confidence in the Eurozone's economic stability and its role as a safe haven currency amid global trade uncertainties. US dollar weakness. The US dollar faces downward pressure due to concerns over rising national debt from recent tax cuts and spending bills, as well as expectations of Federal Reserve rate cuts later in the year. Trade tensions, looming US tariffs and erratic trade policies have increased market volatility, further diminished the dollar's appeal and contributed to the euro's rally. These dynamics suggest a continued bullish outlook for the Euro-US pair in the near term. So again, we always go through the long-term trends first, and on the monthly, you can see there the price has spiked right above that moving average band on the price, as well as the moving averages on the CCI, giving us a bullish momentum. What I look for as well is any bearish or bullish divergence on all of these charts, and I currently don't see any divergence, so we'll proceed on with the weekly chart. On the weekly, likewise, very bullish on both the price and the CCI above the moving averages. And again, there's no divergence that I can see there. And lastly, on the daily, we've got it's actually the CCI is broken into that moving average range, and the price is still bullish well above the moving averages, but notice it's starting to pull back very slightly. Also notice we did have a bearish divergence back here, lower highs on the CCI versus higher highs on the price. That pulled back, and the way we measure that was a minimum 23.38% Fibonacci retrace. Would have gone from that high to that low, and you can see there it broke in that actually a bit below that. That would have gone down to there, the 23.38% Fibonacci retrace. It bounced in there, then it bounced out of there. So that's already been hit, and that's a minimum retrace we can expect. More than 90% of the time it hits this retrace. But notice as well, we've still got a bearish divergence. So if we draw it from that point on the price, it's there, to that same period on the CCI. What does that tell you? If you've got a declining CCI or lower highs versus higher highs on the price, that's also a bearish divergence. So we can expect a pullback. Now, it's probably a bit too early to start measuring a pullback, but just to demonstrate how we measure the minimum retrace, assuming it starts pulling back from there, where it is at the moment, we can expect a pullback to the 23.38% range at that level there on the Fibonacci level. Now that's a minimum retrace. You could just touch that and bounce, or it could actually fall a lot further. We can't tell at this stage. We take it one step at a time, and that's where we are at the moment on the daily. But again, a bit too early to measure that. That price could still rise. So long as that price rises and that CCI keeps falling, we're going to continue that as a bearish divergence. It just means we have to readjust that Fibonacci retrace level. So if we go to the 1 hour chart, again taking long trades only, we also look at the 1 hour chart for any divergence. You can see here, I've already marked it. We've got a bearish divergence on the CCI, lower highs versus higher highs on the price. You can see that's independent from the daily, by the way. So we always look at the lower time frame. Just looking back here, if there's any divergence, you can see there that those highs were lower, and so were the highs on the CCI there. So the CCI at that point was moving in transit in similar to pattern to the price chart. until such time it got to here. You can see there that was almost a double top on the CCI, slightly higher at that point on the CCI versus higher highs in the price. But since then, it's actually fallen off a lot stronger. And as I said, if we looked at that now, looks like it's already broken to the downside. We'd take it to the recent significant low. And you can see there, it's already touched that 23-38% range. With that wick of that candle, it's already broken into that range, and that's all it needs to do. Let me just readjust that to that level there. So it's already broken into that range. That's all it needs to do. So from here we can expect, or it very likely may continue to rise on both the CCI and the price. At the moment, the CCI is in that moving average range, so is the daily. So to go long on this now, I'd like to see the hourly break higher on both the price and the CCI, but also the daily to also break higher on the CCI especially. The prices are higher there, but I'd like to see the daily CCI break higher as well to be bullish and to take trades. Now, next thing we look at is the back testing. And what I've got here is the stop loss approach and the average down approach. And what I've got here in terms of going long, starting back from about the 27th of May, that's this little period back here when the price and the CCI broke higher. Now, this would have been dangerous because, as we said, we've already identified a bearish divergence. But nonetheless, I'm showing you the results. And the way you measure this is you then track it from that point when the CCI is bullish and so is the price above the moving averages. And at the very latest, you should probably close it out each time it breaks into that moving average range. So theoretically, you probably shouldn't be trading this period here, but we're going to let it go only because it's rising and staying above the moving averages of the price chart. But at the very least, you should also look at the CCI and the price movement as well. And what we're looking for is any divergence, especially any bearish, because we're going long. We're trying to identify any bearish divergence. So what we're looking for is lower highs versus higher highs on the price. Now, we've already marked this on the other chart, but you can see there we've got lower highs on the CCI versus higher highs on the price. We've already marked that. So if you were going long during this period, you probably would have closed out your trades at the very latest at this point here when the CCI broke below the moving average range, and so did the price. And then re-entered it once it broke higher again, then again closed it out. So you might have had little small gains here and there, and then finally breaking higher there, and that would have avoided the drawdown at that point. Until such time we started seeing a bearish divergence here, as I said, on the hourly. So again, if you're new to trading, we're now including a weekly video series, Pete's Investing +1 videos, as part of the Pete's Investing channel, as I mentioned. And the +1 videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content and help support the channel, why not subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.